Hello and welcome to this edition of Young Turks in the News. Today we have on the show BLACKBUCK, one of India's leading online marketplaces for trucking, which has closed a $150 million round of equity funding. Now, the round was led by Goldman Sachs Investment Partners and Silicon Valley-based venture fund Accel. And the other new investors who also participated in this round were Willington, Sequoia Capital, B Capital and Light Street. Now, I'm joined by Rajesh Yabaji, CEO and co-founder of BLACKBUCK. Now, Rajesh, when we first had you on the show back in May 2017, so literally 2 years since you were featured on the program, you've managed to bag this large round of funding. And at that point, when we first featured you, you were about 2 years into the business. You guys had quit your jobs at ITC to focus on the full truckload logistics space. Now, 2 years on, 2019, where have you gotten to?
I think the fact that we are in this industry of trucking, which is a massive ocean, right? It's a $150 billion market. And how much ever we innovate, how much ever we scale, I think the scale from a relative comparison has always been like very small. So we like hardly are at 1% of the industry. Just telling you very broadly how the last 2 years for us had been. I think we've grown tremendously in the number of clients we've onboarded. We've grown tremendously in the number of trucks which today partner with us on the platform.
Okay, interesting, Rajesh. What you're saying is that even right now, you have just 1% coverage. But just for perspective, I'm going to read out some numbers for our viewers, and I'm picking this up from your release. So BLACKBUCK has a presence in 400 plus industrial hubs. You have about 300,000 driver partners or truck partners and 10,000 plus customers. Talk us through some of these numbers and contextualize it for us. What does it all mean?
Before, if a trucker used to go into a market, it used to take between like 1 day to 3 days, depending on the market, to get a load. On the platform today, most of these truckers get pre-allocated loads, right? Which means that it's a negative time to match for them to get an inventory. And what all these simple things do is that in a month, when these truckers typically used to drive only for 15, 17 days and 13, 14 days was idle, today the idle time has sort of come down to like 5, 7 days, right? And this results in them making more earnings. The driver earns more, the fleet owner earns more, right? So this is like the micro level impact which we have created. And this has been created, because of, two large dimensions.
Okay.
I think one area where we have deeply invested is in the area of supply. Like we today have presence in deeper parts of the country. We have our strong presence in about close to 5,000 villages, where we work with these fleet owners, educating them, getting them, adopted onto our products. There's a amount of training and education which we need to do from a technology adoption perspective, right? That's on the supply dimension. The second dimension, which defines the company, which defines the DNA of the company, is the entire product and data dimension, right? So the kind of products which we have created for these guys to use, these products which are enabling them to do more kilometers, get their routes optimized, get their drivers to be able to, use the products and get managed by these fleet owners on the platform, right? I think all of this and the amount of data which we have generated in the last 4 years, right? I think the play on the product and data side, right? This is the other dimension, which essentially is core to BLACKBUCK's success. So, around these two dimensions, we'll be doubling down on our investments, right? I think we'll be scaling our technology teams by about 3 to 4 times. We'll be scaling up our expansion in terms of our villages across the country. And I think we would be probably having about 10,000 villages coverage as we speak in this year. And these are the dimensions where we'll be doubling down.
Okay, so that's on the supply side, Rajesh. On the other hand, give us a sense of where the revenue mix between large corporations and SMEs falls. I know BLACKBUCK services, the likes of HUL, Reliance, Coca-Cola, Marico, Asian Paints, and a whole bunch of other large enterprises. But what's the revenue split between what's coming from the large enterprise and what's coming from the long tail of SMEs?
Yeah. So, I might not be able to give out the exact numbers, but today the company actually started with majorly serving the corporate needs, large-scale companies needing logistics, having logistics requirements across large, vast networks, right? So that was the first problem statement which we started solving. So today the company continues to have majority of the revenues coming in from the corporate side of the business, where I think you name any manufacturing organization in the country, most of them would be working with us. I think the kind of value we've been able to create by working very closely with the fleet owners and the drivers of the country, which makes the entire service very cost effective, at the same time with a quality which nobody can match with. And also I think the way in which these companies interact with us is through a fully automated ERP integrations perspective. On the SME side, this is a product which we launched about 2 years back, and it's, as you rightly articulated, it's a long tail customer base. We work with about close to, I think, 9 to 10,000 of these SMEs in the country, and this is one of the areas where the next wave of growth for us would come.
And what is this growth costing you though? Now I'm picking up your filings from 2018 where you said that you generated about $135.5 million in revenues at a loss of about $17 million only. And I'm saying it's a conservative number when you compare it to what we typically see, this kind of loss or burn in the consumer internet space. But Rajesh, tell us, what are your unit economics like right now? And what's the path for profitability for you? Because everything's said and done, you're a B2B business, right?
Yeah. So Sana, I think this is something also as an entrepreneur, what I have learned in this story is that I think we are in a B2B space, and really the orientation towards growth has to be very disciplined, because it's not a consumer internet industry where you're like spending billions of dollars for consumer behavior change, right? And if you look at it, if you aggregate all our burn numbers, I think as a company we wouldn't have spent more than about $40 to $45 million to come to this particular state, right? So I think which is very different and unique about our company, which is why it has the attraction of many multiple marquee names in this space. The state at which we always keep the company is towards that if we change our orientation from growth to profitability, I think as a company we can really deliver a bottom line profitability in like 6 months to in a year if we decide so. I think that's the kind of unit economics which the company possesses today. And talking about growth in the past, I think over the last year on the gross transaction value which got generated on the platform, I think we have grown like between 3 and 4 times on the platform. And moving forward, I think we're going to be aggressive, because I think we've raised funds to grow aggressively. But I think most of these are going to be large scale investments into, again, supply and product side, which will help us grow and get to the next level.
Yeah, so profitability, that tap that you can turn on and off, but in the face of competition, right? I mean, let's bring that perspective in as well. So on the one hand, of course, you have the large incumbents, the TCIs of the world. On the other hand, you have very, very well capitalized startups, Rivigo, which is a sort of contemporary of what you do. They have a different model, but equally well capitalized. And then, of course, we are seeing a lot more newer startups in the logistics space. And these guys are picking up verticals, right? Say, for example, the agri supply chain, and then they are building out end-to-end services there. What is your reading of the competitive landscape, and how are you negotiating it?
As BLACKBUCK, we've always been leaders in this space, and we were the first ones globally to build a full stack trucking marketplace.
Okay.
And we've seen that getting replicated by multiple players. Right. I think I would not comment on direct names, but I think today where we stand, I think we have much more than 90% of the online trucking market share in India. And I think there are multiple players, even larger players in this ecosystem, who are replicating our model as we speak today.
All right.
So and speaking about more people who are starting up in this particular space is, we have a $150 billion trucking spend in the country. Of that, what BLACKBUCK is going after is only a $90 billion spend, right? And there is like a LTL segment, a less than truckload segment, express segment, over-dimensional cargo segment, right? There are multiple other spaces which are like still like green fields, which companies are attempting to build and go after. I think how many ever startups sort of come in. I think logistics is one such space where I think there is a lot of room for accommodating large number of players.
And any acquisitions on the cards, Rajesh? You have a large war chest now. Cumulatively, over 330 million is what you've raised. This round itself, about 100 odd million. You've done some acqui hires in the past, but what's the strategy going to be going forward?
So I think we deeply evaluate 1 to 2 players every month, right? I think there are like at least 10 to 20 inbounds which come in every month. I think the quality of companies, I think we are finding right now is on the rise, is improving day by day. I think if there are opportunities, I think we would be more than willing to go the inorganic route.
Lastly, Rajesh, as part of the fundraise, BLACKBUCK employees will now get a right to liquidate up to 25% of their vested shareholding in the company at the current share price. Now, this is the second time that you're giving this opportunity to your employees in the last 4 odd years that you've been in the business. Why are you doing it? What's the motivation, apart from, of course, opening up space on your cap table?
Yeah, so I think there is like 2 things which I think I recollect when people are asking me this particular question, right? I think of course when people join organizations, today I'm an employee of BLACKBUCK, and there is a particular cash compensation which I make, and similarly other people also make. I think that's important, but I think what goes long for people is what they make from the equity compensation, right? Which is typically an exponential growth which people get from that part of the compensation. And today at BLACKBUCK, I think most of the people who are on the ESOP schemes make a disproportionate amount of wealth from the equity part. And this is how we have structured the compensation philosophy of the company. And also, if you look at the private markets, right? Private markets where BLACKBUCK stock is today not listed in any of the exchanges, etc. This is an illiquid stock. So the idea always has been to be able to put a worth to the paper which all of us possess today, and our board and our investors are super supportive of doing this, and hence we are doing this in a much bigger way this time. So last time, the company was smaller, the ESOP scheme liquidation was on a smaller scale. I think now we've been able to do it at a much larger scale. And also I think what's important is that when we formed this pool, we had like about 15,000 options in that pool, and the pool was worth 15,000 rupees, right? Which is basically $200, right? And today as we speak, this pool today stands at like $43 million and 300 crores. So I think that's what that's what you can see, the growth of BLACKBUCK, and which is commensurate to the growth of the people's wealth as well.
But I would think it's a good thing if not a lot of your employees actually exercise the option right now. What are your thoughts?
Exactly, Saina. So last time when we provided such an opportunity,
all right,
we were only, let's say X amount was outlined for such kind of a scheme. Only about 45% of that got utilized, right? And I think it's for the company to give a right to the people in their hands, and it's for them to decide what they want to do.
Okay, Rajesh, thanks for joining us on Young Turks once again. Pleasure as always to have you on the show, and we'll keep tracking your story as you go pan-India.
Thank you, Sana. Really nice to speak to you again.
With that, it's a wrap on this edition of Young Turks in the News. Tell us what you thought. You can write to us at youngturks@nw18.com. You can also ping us on Facebook and follow all of the news and action on Twitter. Our handle is @CNBC Young Turks. Till next time, thank you very much for watching.